Afternoon, evening, and night. My name is Gareth Soloway, and it is a pleasure to be with you guys here on this game plan, doing it from my new studio here. So again, please forgive any little glitches. We're trying it out. I hope it goes smoothly. Bottom line is we have a lot to talk about. All right, so number one, let's talk a little bit about what's going on in the market. We're seeing the market selling off this morning. We have the S&P futures down over 20 points. NASDAQ futures down about 100 plus points. The kicker here is partly earnings, right? We got some earnings out of Netflix. We're going to discuss that in just a minute. But overall, really what's going on here is more than anything, you have some Fed commentary that is starting to spook the market a little bit. For instance, I believe there was one Fed, I don't know if it was Bullard, but he basically came out and said he doesn't see a recession and the Fed has to stay the course and continue to raise interest rates. Now, the issue with that is that we just heard last week from the Federal Reserve that we were going to have a mild recession. So there's this dichotomy, there's this divergence building within the Fed where some people are still saying, hey, listen, mild recession, but we're going to still raise interest rates. That's freaking the market out because the market is smarter. You look at the 10-year yield, it's all the way down. All right. You don't have the 10-year yield trading where the Fed funds rate is trading at 5%. You have it into the 3% range because the markets are anticipating that essentially we're going to have a recession. So these are things that are going on right now that we have to be aware of, and that's pushing the markets down. There's also another factor here, and this is something that I've been surprised has been a lagging indicator for the markets that the markets have not picked up on. Not only did the Fed say that we're going to have a mild recession, but we also heard Warren Buffett last week say that one of his retailers that he owns, the year-over-year sales were down 22%. 22%. That is a massive number. All right, you know what the market did when the Fed said a mild recession, when Warren Buffett said this? They did nothing but float. They floated higher, in fact. The market is ignoring things. And one of the sayings that I always tell people is this. I say, listen, guys, the market only cares when it cares. And it sounds like a weird saying, right? Like the market only cares when it cares. But the bottom line is what that means is the market will stay in a euphoric stage until it finally gets slapped in the face, realizes something is wrong, and then you see massive selling pressure. And I'll tell you this, look at the VIX chart. You look at the VIX chart. In fact, I want to bring up the VIX chart right now here, guys. Let's take a look at this. The VIX to me is a very scary scenario here. All right, so we have the VIX, and the VIX, the volatility ETF, number one, is bouncing today. But prior to today, the VIX was trading at levels it had not seen since early January of 2022. Now, remember, the markets topped out in 2021, late in 2021. So you're seeing a volatility index, which, by the way, is a fear gauge. A lot of people don't understand the purpose of the VIX. The VIX essentially tells us how much fear is in the market. All right. And the reason why that's important is to say that, hey, listen, if the VIX is showing us that there is no fear in the market, it is a contrarian indicator. That's how I use the VIX. So the fact is that when I see the VIX at 16, at 17, I start to say, listen, people think everything's hunky-dory. They think everything's perfect. And to me, that's problematic. That tells me something is wrong or going to happen. It opens the door for a surprise because no one's expecting a surprise. So what do? I start shorting the market. I start nibbling on shorts. You know, whether I'm shorting the NASDAQ, whether I'm shorting the S&P 500, whether I'm buying the VIX, I'm doing all of these things because, again, the signals are starting to emerge. All right, I'm going to flip over to a couple charts here. I want to first talk about Netflix earnings. Netflix earnings here, guys, we're going to take a look at that chart. And again, if I flip over to the Netflix earnings, we're going to go to the after hours data. And this was remarkable, folks. Take a look at that drop. Netflix dropped 10% initially and recovered. Now, number one, they reported a miss on revenue guidance, whatever you want to call it. But the bottom line is the market recovered because of some of the statements that accompanied with it. In addition, I look at this and I say, that is complacency 101. I say that again, the fact that the market's willing to forgive a revenue miss, even though they beat on earnings, to me, that's telling you investors are saying, no big deal. It'll be fine. I'll wait a year. I'll wait 2 years. The market's going to be fine. The economy's going to be fine. That is incorrect, guys. And again, the Fed is telling us this. The Fed is telling us that we're going to see a recession. And by the way, I went off on this. I had a David Lynn interview yesterday. We talked about this quite a bit. But the bottom line is, if the Fed is telling you, let's be honest with ourselves. All right, this is look inside. Look inside. If the Fed is saying we're going to have a mild recession, and remember, their track record is that, oh, don't worry about inflation. It's going to be transitory. What do you guys think when they say a mild recession? Do you think it's just going to be like, nah, no big deal, mild recession? Personally, I'd be a little bit more nervous. All right. And again, that's the kicker. Not only that, but then you had, again, a Fed official this morning saying, hey, we got to continue to stay the course and raise rates. So at what point does a mild recession, which probably already means that they're telling you it's mild, but they know it's going to be worse, if they keep raising rates, what happens next? A mild recession turns into them telling you it's going to be a mid-level recession, and then it actually is going to be a much worse recession. And then you go, by the way, there are stocks out there, Apple, Microsoft, trading at valuations that they're almost at all-time highs. They're trading at forward PEs where they were a year or two ago when we had the bull market. That is not healthy. They are being used as a cushion. They're being used as a safety net. Those, to me, are some of the biggest shorts out there when reality strikes that we will see a recession in the second half. And it's not just going to be a small recession. It's going to be a long recession. We're talking about a long recession here. So in any case, bottom line is, when we look at Netflix, guys, take a look at this. If Netflix dumps out, and right now it's trading down a little bit more, we're finally seeing some downside action on Netflix, a little bit more falling action. My big level on Netflix today, so there's a couple. The first one is going to be the 310 level. 310 on Netflix will be a little bit of minor support. We then have 293 to 294. That's the low from pre-market yesterday. That will be a technical buying opportunity. The first one, probably I don't do. The second one, I would consider day trading today. And then the third support is at 287.50, and that's a double pivot bottom. All right, so those would be your two levels. Now, there is some good news out there. WAL. This is a regional bank. This regional bank is spiking to the upside beautifully. We are trading up about 15 to 20%. Now, if you look at the daily chart here, daily chart right here, it's actually still down significantly from where it is or where it was, but it's having a good bounce. Now, if you're in the KRE, if you're in any of the regional banks, they're getting sympathy bounces. A good example of this would be PACW, right? PACW trading up on that news. U.S. Bancorp reported earnings today. USB, that's a regional bank. That stock is up as well. So again, the regional banks, if you're in regional banks right now, those are actually showing some signs of life while the rest of the market is moving lower. Now, one more caveat. We saw that when the regional banks were falling, money rotated from regional banks and banks to technology. This morning, we're seeing technology stocks selling off, regional banks bouncing. Is there a money flow back towards regional banks that's going to put pressure on some of these technology stocks? And again, tech to me is way overdone, especially the large cap tech. All right. Don't forget, we're going to get into a couple other things here. But number one, we have to look at the earnings after the bell today. Earnings after the bell, we have Tesla. Now, Tesla's a fascinating chart here. For those of you that have taken the Winning Trader series, I got to show you this because this stuff will rock your world. All right. So number one, we saw, I'm going to erase this trend line here. So if we look at the chart right here, we had a wedge pattern. Notice you went up to the high end, you came to the lows, you went up to the highs, and then look, you broke. All right, now again, it's a break. But what have you formed off of this? A bear flag. That is a classic bear flag. Look at the sideways consolidation. And remember, a bear flag is denoted by a down move with sideways to maybe slightly up, 45 to 90 degree up angle. That's a bear flag. Just like the name says, bear flag means it can go lower. All right. One of the things I want to point out for those of you that have taken the Winning Trader series, do a time count. 1, 2, 3, 4, 5, 6, 7. A time count. That is a perfect time count, a 7 count. I use that in my daily trading, whether it's weekly, monthly, or intraday charts. Daily charts doesn't matter. That is an amazing, absolute amazing time count right there. Price is already starting to break down because the markets are lower. Let's see what it does on earnings. On earnings, your first support's going to be 164. Again, earnings are after the bell today. So 164. For me, my big buy level where I'd play for a trade, if we got down to about 144, there's a major gap fill down there. That would be something that I would keep an eye on. But again, I did read this yesterday as well, is that there was an options trader that put a massive bet on the table that Tesla was going to collapse on earnings. Now, I want to caveat that by saying nothing that I've said here will get me to short Tesla into earnings, even though you have a bear flag, even though you have that options trader. And the reason I say that is because with earnings, if it doesn't work out, let's say somehow Elon Musk starts mentioning AI a million times in his conference call and the stock goes up, it can be a massive move in the opposite direction. So I generally don't buy or short stocks going into earnings. The reason is because it's a risk factor. Remember, everything we do here, everything I do in trading is all about analyzing risk reward. And if the risk is too high, why would I put my money at it? If I want to gamble, I'm going to go to the casino. I always say this to my traders. Go to the casino, get free drinks, hang out with your buddies, have a great night. You go to the casino not expecting to make money. If you're going to do a trade where it's 50-50, why are you doing that trade? You're not with your friends. They're not giving you, the market's not giving you free drinks. So think about it like that. You only want to take and initiate trades when the price action, the probability of success is heavily in your favor. That's why I use technicals. That's why I use psychology, because it puts me in that position. All right. IBM also reports after the bell today. That's another tech play. If we look at the daily IBM chart here, let's take a quick gander. IBM not telling me much here. There is a little bit of a, let's take a look here. There is a trend line that denotes down here to up here. So that's a little bit of a wedge. And then you also have a very, very steep trend line right here that, again, you want to be a little careful on because it's so steep that goes right down through those highs. So essentially what you're doing is you're coming to the head, which could tell us that IBM could break one way or the other. In terms of price action, I have no bias one way or the other. Versus Tesla, yes, a little bit of a negative bias going into earnings, but here with this one, I have no bias one way or the other. Longer term, I actually do like IBM. I think they're turning around the company. I like the fact that if you go to your monthly chart here, the chart has, I mean, you could go back to the 1990s. I mean, think about this, guys. In this chart, it's pretty wild. In 1999, IBM was virtually trading at the same price it is today. Now, granted, it paid out dividends and everything like that, but still, that is remarkable when you compare that to other charts out there. And again, to me, longer term, I actually like IBM. Shorter term, no bias going into earnings. All right, I know everyone wants to go over Bitcoin. We've got to go over this Bitcoin chart. I got to talk to you guys about this because the bottom line is with Bitcoin, you have to start to be aware that there are factors here that are going to cause issues for Bitcoin. All right, so right now, we are at a major resistance. I've said this till I'm blue in the face. The 30,500 level is the level to watch. A lot of people kind of round it down to 30,000. No, the technical level is the technical level, 30,500. Look at what we've done right along here on the chart. Bitcoin has hammered on this over and over again. This is the daily chart. We even had a doji right here, which is a bearish signal where it popped above and then got slammed down right to that level. I love how it flushed 2 days ago, rallied back, and now it's flushing again. The level I'm watching for short-term bias. So right now you're at resistance, but honestly, resistance can be broken. That's a possibility. But one of the things you have to recognize here is this longer-term trend line, which I just discussed with my live traders in office here just 10 minutes ago before I started this broadcast, is that this is a long-term trend, right? You hammered on it here, you hammered on it right here, you broke above it, now you hammered on the opposite side. If we break below 28,500, 400 area and we confirm using the confirmation signal, that gives us now a downward channel or a break of the trend. So for me, you're now, and by the way, these two lines are going to meet. So this is going to happen over the next week or two at longest. But right now, look for this support line right here. Also notice, I want to show you this, how if we connect these highs right through here, this line actually merges right at that point. So 28,500, 400, if we break below that, that is very bearish for Bitcoin. Okay, the other thing I have to talk to you guys about is there's so much FOMO out there. There is so much. You go on Twitter, you go on Instagram, you go anywhere out there. Everyone's talking about alt season. Everyone's talking about this. The alts are going to start going 100x or 10x or 5x, whatever it is. My issue with that is that basically, because that narrative is out there, everyone's already positioned themselves long. If you haven't seen the alts go yet and everyone's already believing that it's going to happen, that's a very, very concerning issue. Because again, think about this. Who's going to drive the alts up now? If all the little investors are in because they believe the alt season is coming after the Bitcoin run, how or who is going to now push it up via using massive amounts of money? That's problematic. Remember, the psychology of the market dictates, and psychology is key right up here. And hey, listen, we can go to, heck, let's go to some charts out there. One of the ones, by the way, Matic, look at this. This is not a good chart here at all. But Matic, again, guys, right on that support line, you're not seeing the price action, to me, that denotes an alt season rally, all right? You're not seeing it. And also keep in mind, this is the first bear market where the Fed, this is what drives me nuts. Everyone's so regimented. I still remember when I was calling the high at 69,000 with the drop to 20,000, everyone was telling me, oh, you don't know what you're talking about. The on-chain analysis shows we're going to 100,000, X, Y, and Z, and I'm like, dude, the charts are the charts. Psychology is psychology. It's worked for hundreds, if not thousands of years. But somehow you're going to come in here and say that, oh, some new metric, on-chain analysis is going to play out. To me, on-chain analysis is the same as fundamental analysis. Fundamental analysis long-term makes sense. In the short term, it has nothing to do with greed and fear. Greed and fear drive the markets. That's just a simple explanation, and it's absolutely true. So when you have this scenario, guys, where you have greed and fear, guess what? Fear is going to trump fundamentals, on-chain analysis every time. Now, again, we're now at a point, and I've said this before, number one, we're in a cycle where the Fed is not printing money. That's very, very tricky for Bitcoin. Doesn't mean Bitcoin's not going to break out here, but it makes it harder. So to think that we're going to get the same 4-year cycle when Bitcoin is not being propelled by massive inflows of money from the Federal Reserve, from the US government, et cetera, that's problematic. In addition, every which way, I'm seeing Gary Gensler and the SEC suing this person or this company or that company. There's a lot of issues here. Big money is not going to commit. So again, I bring my point back to saying, well, who is going to drive the alt season if all the small investors are banking on it, thus in? And the answer is, well, big money's not coming to the rescue because they're not willing to commit capital in major amounts because there's no clarity, there's no structure, there's no rules in the crypto markets yet. Literally Coinbase yesterday said that they were thinking about moving out of the US because they have no clarity. And this is a publicly traded company. So anyways, my point is this, guys. Be careful here, again, in the crypto markets. I have seen it before and I've seen it again. The bullishness in Bitcoin and crypto right now is equal to the bullishness we saw at 69,000. That to me is a warning sign because to me, that's a negative divergence. To see that much bullishness at such a lower price, that is not a good sign. Now, again, will we see new lows on Bitcoin? Will my 12 to 13,000, signal come true? Will 9,000 maybe get hit? I don't know. The point is just be careful up here. Make it prove that we can get above 30,500 by price getting there, staying there for at least a week. Then you can start to say, okay, now for sure the lows are in. Doesn't mean we won't have pullbacks, but at least the lows are in. All right. Last thing I want to go over here, guys, is just a couple other things on the charts. And again, UAL had earnings, so we'll cover that. Well, you know what? Let's go over silver. I know you guys are silver bugs out there. Let's touch base on the chart on silver. Silver, to me, still has to pull back. If you remember in last game plan, last Wednesday, I said I actually did a short on silver live when I was on air. All right, that was right up here. Right now, again, that's in the money. I expect it to pull back. This is where it's going on silver. You're looking at around $24 on silver. That would be a classic retrace to the scene of the crime, this bigger trend line here. All right, so that's what you're watching there. All right, on gold, let's take a look. Gold as well. While I think gold is a huge, you guys know, listen, I've been a huge bull on gold since 2022. I still think it's going to break the all-time highs. But the bottom line is that you have to look for a pullback here. We are seeing downside today. My target is these two trend lines. If I extend this trend line out and this trend line right here, look at how they're meeting over here. That's your retrace to buy. I won't be a buyer of more gold until it gets back to that level. You give me a retrace, I will absolutely play it. Last week, I also talked up natural gas. What has natural gas done? It has started to rip higher. Take a look at this. It is down today, but what a move the last few days. I love that move to the upside, but it is again pulling back today just a little bit. All right, so the bottom line is, take a look. Lastly, I want to look at the SPX chart here, which is the S&P 500. Again, the SPX hovering right around this pattern. Now, the biggest thing for me, and I don't have this chart here, but I've shown it in recent videos, is this. This is a move up into euphoria, and this is complacency. If you look at the psychology of the market chart, and you can all Google this, the psychology of the market chart, you will see that this pattern here is the point that after euphoria, you pull back, and then you go into complacency. It is the beginning, or just before the beginning, of a bigger leg down than we have yet seen. So I'm going to leave you with this. By the end of 2023, the S&P will have at least touched 33 to 3,400. By 2024, we will touch 3,000. There is big downside coming. Analyze the charts. Analyze the psychology of the chart. You will see it in the charts. Every metric I'm seeing, the Fed is telling us this. The metrics, the complacency, everything rounds up to being absolutely 100% telling us that we're going to see downside. So that's where I'm positioning myself. All I can do is let you know what I am doing myself. You guys have a great rest of your day, and thank you as always for coming out to today's game plan. Go visit inthemoneystocks.com, verifiedinvesting.com, and also, of course, guys, like this channel, share it with your friends. We're going to be going live every single day starting real soon with these morning 20-minute sessions. Take care, and I love you all.